All right, welcome back to a quick video. This video has one purpose and one purpose only, and it's to answer the question for new or even experienced investors whether or not your deal is profitable. It may seem obvious on its face, but I'm seeing a lot of deals come in where people are just taking the purchase price, the rehab budget, the after repair value, and going, yep, there's margin there, it's a good deal. That, of course, is not the whole story, so I just want to go through a free tool that we've developed for you that you can answer this question very quickly. It should take seconds, and you should be doing this anyway. Sometimes you have a spreadsheet, sometimes people are selling you spreadsheets, whatever the case is. We don't care what you use, but you need to use something, whether that's a calculator and paper or a tool that we make you or a tool that you bought from someone else, to make sure that the deal you bring us and the deal you're going to get into is actually a good deal to make money on. So I'm just going to walk you through thehardmoneyloancalculator.com. I'm just going to walk you through that. This gives you real-time updates. Obviously, if you want financing, you can come get it from us or get a quote from us or whatever you want to do. But let's get into it. So the details, the germane details, this is an example deal, like whatever. Put your numbers here. And if you're a newer investor, go on Zillow and just play around with this, right? Play around with these deals so you kind of get a feel for eventually an intuition of what's going to be good and what's going to be not good. Okay, once you've got your deal numbers in, it's going to spit out some preliminary information. Just keep going, right? There's more to fill out here. The loan amount doesn't really matter that much for the purposes of this because we're just trying to show you, like kind of running you through this, but you should put your loan details in the spreadsheet here, or in the app rather. Let's see, you did a 6-month flip, interest only, tax rate. So something that I see borrowers, particularly, they are surprised. So during a bridge loan, I'm not used to seeing borrowers pay the tax bill. It is what it is. So you're surprised when you have a $5,000 tax bill when you go to sell the property or you go to refinance the property while it's still listed. I see a lot of borrowers surprised about that, so it tells me that they're just not underwriting that as a cost in their numbers. When you're in the $5,000, $6,000, $7,000 range, that's certainly a number you should be aware of. All right, and for the taxes, just put whatever your estimated tax rate is, typically like 1% to 2%. Another thing is insurance premiums. So if you're in a state that's affected by these weather phenomena and these kind of hurricanes and things like that, like realize your premiums are not throwaway costs. They are in the order of $3, $4. I've seen policies for fix and flips as high as $10,000. So you need to include insurance. You need to include insurance. If you have a really good agent, we've got good agent partners, they will prorate. So like they will, let's say it's a 12-month loan. You might get a 12-month premium, but then if, let's say, you sell in 6, they'll give you back the 6 months. So check with your agent, get a good agent that gives you good premiums, and find one that you can stick with, because over time they'll help you out on the cost. Okay, transaction costs. These obviously, I think most people, if you're going to use a realtor, you understand that you're going to pay that realtor, but a lot of costs that I'm not seeing underwritten are title fees. So in a lot of cases, you are going to pay for a title policy. So if you're getting a loan, you're going to pay for an owner's policy and a lender policy when you buy the property. And then in a lot of jurisdictions, it's customary for the seller to buy the buyer's owner's policy. So you should underwrite that. Could be depending on the value of the property. I mean, $3,000, $4,000, $5,000. That again should not be overlooked. And then of course your loan fees. So if you scroll back in this video, you'll see that this number started at $77,000 about. I think that was what the number was. But then we actually included the cost of transacting real estate, and you see that this deal, it lowered by almost a third or over a third. Okay, and you'll see that it's just because these extra third-party costs that are associated with doing real estate deals don't get accounted for. So you can play around with these numbers. I mean, if you hold it for 8, you hold it for 9, you see that as you hold it. So this is really what I'm seeing lacking. I'm going to continually post videos on this because I just see it not hitting home. I send a new investors here and I say, go play with this so you can see what it's like to actually do a deal. Because a lot of borrowers, tell me I'm wrong, a lot of borrowers focus on the loan costs, on the extra $1,000 in fees or whatever the case is. But, that is not the whole thing, right? All the stuff is the cost to transact, the insurance. The loan is just a small part of it. It does matter, right? You should not be getting beat up by fees, but a lot of people kind of hinge their deals on, hey, can you take off a point or something like that? When in reality, these are the numbers that need to be affected. These purchase price, rehab budget, ARV. A lot of these other costs are just fixed. It's cost to play the game. So I hope that helps. I'm going to continually post videos on this probably once a month just so it pops up back in the algorithm, because I'm seeing a lot of investors surprised by the cost to do real estate deals. And I mean, you shouldn't be, right? So do your diligence, make sure the deal works. TheHardMoneyLoanCalculator.com. See ya.